Yo, what's going on, guys? Patrons, how are we? So I'm currently I've done this video, should I say, for you guys to update you on Bitcoin and Ethereum. I've also touched up on entries and exits. I'm going to be doing a video later on regarding that, but I've gone into a bit of detail for you guys, so you guys are getting it right now. All right. I hope your days are going pretty well. Let's get straight to it. Yo, what's good, guys? What is happening? All right. So listen, I'm doing this video, okay, to introduce to you the understanding behind an entry and an exit. All right. Now, it's really important that you pay attention to the fact that we will never have the perfect entry or the perfect exit. However, there are variables that come into play which will allow us, all right, to really capitalize on at least accurately making an entry and accurately exiting from the trade. Remember, there will never be the perfect exit or the perfect trade. It just doesn't exist. And if you think that, you're lying to yourself. All right. So we're going to go back in time. All right. And we're going to have a look at what would have been deemed a perfect entry, or not a perfect entry, sorry, an accurate entry. So let's look at this part here. All right. You can see that this W formation has played out perfectly. The second leg is showing a bottom. You can see a vector candle right there. Although it's a small W, fundamentally, it's still a W on the hour time frame. All right. Price comes back down to the low, pins the 50-day moving average, breaks out, comes down to the lows, retraces back up. We form the middle part of the W formation. All right. Then it comes back down again and it starts to stall, pin the low, pin the low. All right. Now, at this point, you know that once the middle part of the W formation has been formed, you have effectively got your center point for the pattern. Okay. That's the center point. Now, when price comes back down, there are two types of entries. You've got the advanced entry, which is confirmation of price showing conviction at the 50-day, which is right here. Or you've got the safety entry. Now, granted, there are times when price breaks out of the safety entry and pulls back and then decides to break out. This is where your element of risk comes into play. I'm seeing a lot of guys using leverage and it's killing them. And then they're coming back to me and they're saying to me that they can't understand how to make an entry or an exit. You know, it's confusing them and they're just losing faith in the system. All right. Granted, if you didn't use such high leverage, you would give the system a chance to flourish. Remember, when you're learning this system, it's about executing a sample size of trades so that you can sit back and say, yo, Tino, I've done 150 trades, okay? And I've found that I am profitable on 97 of them. I'm happy, all right? But when you come and apply the strategy and say to me, I traded 4 times and I lost all 4 trades, I'm not happy with the system, I haven't got time for you. I've given you enough for you to warrant what would be an entry or an exit. I'm telling you now, it's the exposure on your account that's not giving you the chance to allow the pattern to play out. Okay? Because you can imagine right here, look, imagine if you went on leverage on the break of this candle and then you entered right on the open of this candle, it would have flushed you out all the way back down and your leverage would have been, it would have been such high exposure, all right, that you would have been stopped out. Your liquidation price would have been close, because naturally when you're trading with high leverage, you're trying to get your liquidation price to be as close as possible, you know, because you don't want to expose yourself too much. Granted, your exposure right there, your liquidation price is hit. You don't trust the system. All right. You need to trade light, guys. I keep saying it, trade as light as you can. The goal is not to make money in the first instance. The goal is to become proficient in the execution of the entry. Okay, let's find another one. Right. Let's find another W formation. Here we go. Here's another W. Perfect. So you got the first leg down here, right? You then got the second leg. Rise, you then got the retrace, and then you got the continuation. All right, cool. What do we know? Focal point, middle point right here. All right, you've got your middle point, draw your line across. But look what happens. As price comes out, it breaks out, pulls back, and continues back up again. Comes back down, breaks out, comes back down, and then continues up. The 50-day moving average is your ammo. It's the artillery. It's the force that you need when working out whether or not you're going to stay in the trade. Okay? That's why when the W formation plays out, the reason why I say it's so important that you wait for confirmation for price to break the 50-day, come back, retrace it, and continue up. Look what happened. Breakout, retrace, breakout again, retrace again, confirmation. Look at the confluence. 200-day moving average has crossed over, the 50-day has crossed over the 200-day moving average. Price comes back down, fails to break the 50-day moving average, keeps in line above the 200-day moving average, pin to the low, pin to the low. Price continues back up, continues to close above the 5 and the 13-day EMA. Happy days, you step into your trade, up it goes. Okay, so if you got in here, you would have held, all right? You should have held because there was no reason for you to sell. Why? Because price was still within the 50-day moving average and above the 200-day moving average. Even if price was to come back down and trigger orders down at the 200-day, your trade would have still been good. Why? Because your stop would have been at the bottom part of the second leg. All right? But you need to have low risk to be able to withstand a stop loss of that nature right there. If you've got high leverage, you're not going to stand a chance. Guys, I'm telling you, man, be careful with leverage. That's not financial advice. It's common sense. Be careful with the leverage. Understand its utility. All right? Another one. Here we go. W formation here. First leg was higher than the second leg. That's granted. That's fine. Why? Because if you look at the confluence, prices then come back up, closed above the 800-day EMA, a very strong area, and it's continued back out through the 50-day moving average. Where would have the entry been? There's your center point. Okay. Your center point's right there. Comes up, breaks out, retrace to test the zone. And it's testing the breakout of the pattern. And it's testing the 50-day at the same time. Rise. Next profit target, 200-day moving average. Do you see the power of the retrace? And why I always talk about wait for confirmation, wait for confirmation. Guys, I don't want to sound like a parrot. I don't want you to get irritated with me saying the same shit. I don't want the streams to get to a point where you guys, you're saying the same shit over and over and over again. Come on, say something new. I can't say anything new, guys. Why? Because the pattern's exactly the same every time. Everybody is aspiring to find that one way that helps them make money. All right. And if they can replicate that way, they always try and harness it and try and grab it with their whole life. You know, this is what this is. Now, there are people that are confused about the entries. They're confused about the exits. You're not giving yourself, when you confused about the exit point, that's a problem. All right. Because I give enough information on it. Notice when price breaks out of the pattern zone. Okay. Here we go. Let me just extend this. When price breaks out of the pattern zone, you can see that there, yeah? Look. That's the pattern, yeah? You can see rise, retrace, continuation, yeah? When it breaks out of this zone here, where is the next point of interest? That where the market makers would likely try and manipulate price. 200-day moving average. You know? If you were to enter on this green candle, would you have been profit in the first 2 hours? Rise, 1, 2. There you go. You've realized the profit in your first 2 hours. The trade is good. Even if it does retrace, as long as you're managing your trade and you're not allowing it to go below your entry, happy days. Pin to the low, up it goes. Price above the 50-day, price above the 50-day, price is above the 5 and the 13 EMA, happy days. Okay? Let me find you another one. Let's look at an M pattern. Let's take this M pattern up here. M formation, rise, retraces back to the 50-day moving average. Comes up again, tries to take out the previous high, fails. All right? Your entry point would have been, can you see it? Well, it's there. You can see that it's there, yeah? Because the pattern is just not so sharp, the retrace. You can see it there. Drop, retrace, continuation down. There is your entry right there. Break of the 50-day moving average. Breaks completely all the way down, okay? Next profit target, 200-day moving average. Yeah? Guys, the power of projection is going to help you, all right? Look where we are right now in the W formation of Bitcoin. Now, this is for you guys, my patrons. This is the information that you guys are going to get, all right? Bitcoin has now pulled up, retraced back to the 50-day. Look what she has done. This is what we are expecting. It's pulled back to the 50-day moving average. I'm satisfied with this retrace. Why? As long as it stays above this level here, this would be a perfect rise level 1. So level 1 has now ended. Level 1 is finished. Level 1 end. Okay? That's level 1 end. Down here is level 2 start. Right? Level 2 start. Go back to that chart that I gave you guys. I drew that out for you. Okay? Level 2 start. Level 2 is only going to be validated when price comes up and breaks away from this zone right here. Okay? Only if it breaks out of that zone. What it can do now is it can trail sideways and take as long as she wants. All right? It needs to break this previous zone right here for it to continue to go to the upside. All right? Once it breaks out, it will then start to take out key levels right here. Then it will retrace back down to the 50-day moving average. And then we've got the next cycle, level 3. Okay? When you're trying to establish the entry point, wait for price to break out. Don't overexpose yourself. Give yourself the chance, or should I say, give your trade the chance to breathe. Don't go in with any leverage. Stop trying to make money. Start working on the execution. Because if you're desperate, you can go and get yourself a ton of money if you desperately know how to apply your edge successfully. You know, what does a surgeon do when he wants to become a surgeon? He doesn't go and cut someone up and says, I'm just practicing. Oh man, his chances of it are fucked. You know, and who's going to let him cut anyone up? No one. So they start using animals. They use dead meats. You know, that's how they learn. All right. I don't know why people ain't taking this game as seriously, man. They think, you know, it's all about excitement, trying to be with everyone else that's earning money. If it clicks for some people, it clicks. If it doesn't click for some people, ask the community. Communicate with each other. You know? Everyone is applying the same system. Keep watching the streams. Go over and over and over till it sinks in. Rise, retrace, 50-day confirmation. Wait for the pattern. I say it all the time. And it's going to be so ingrained in your minds where it's going to be natural. People have said it, that they hear my voice when they're trading. And that means it's working. All right? I'm very reluctant to give you guys entry points. And, you know, a teacher isn't going to do the job for you. All right? I'm going to guide you. I'm going to take you on the path. It's up to you to walk it. You know? Work it out. Try and embrace the application of the knowledge. Try and apply it. Don't wait for me to tell you when to apply it. Apply it, because the moment you get it, the moment it clicks, I'm telling you now, you will just feel amazed by it all. The moment it clicks, you'll be like, fuck, I've got it. I have got it. All I need to wait for is price comes away from a moving average. It's bound to retrace back to it. Why? The law of averages says so. Mean reversion says so. They need to bring it back into the zone. This is the zone. The retrace level, okay, is the zone. It's the stop hunt, rise, retrace, continuation to the upside. All right? They bring price back into the moving average to regulate the buying and selling influence that they have on the retail traders. They need to make the retail traders believe that they can get in on the dip, they can get in lower. Do you understand? They're trapping the guys. And what do we know about the W formation? Whenever price pulls away out the W formation, it always retraces back. It's the first level. First level rise, retrace, continuation to the upside. We're expecting these next price zones up here. Okay? I hope that helps you guys, man. I really do. I really do hope it helps. Use the confluence of the 50-day moving average, the 200-day moving average. Where is price when it breaks out of the zone? You know, look what it did yesterday, right here. Yeah, can you see? Comes up, advanced entry. Price comes above the 50-day moving average. It closes. It closes above the 5 and the 13-day EMA. The 200 days there. Look at that confluence right there. Your entry would have been there. Rise, up it goes. Even on the breakout of this, rises up, pulls back ever slightly and continues to touch the M3. M2, M1 is confirmed down here. M3 is the profit target. M2 is confirmed. M4 is the profit target. That's what we're looking for. This isn't financial advice, guys. This isn't going to anyone other than the Patreons, but I genuinely want you guys to understand this. All right? You can succeed at this game. I have no interest in trying to hype you up. There is no financial gain for this other than my commitment to you guys. You are paying as Patreons, okay? You expect a commitment from me, and I expect the commitment from you. And your commitment to me is that you focus exclusively on execution. Stop trying to make money for the first instance. Stop trading for money. Just make sure that you have a live account where you can be accountable for the decision that you're making when you're trading. Have the smallest amount possible. Be accountable for it. At the end of the day, if you don't put real money on the line, you're not going to take it seriously. Whatever that value is, doesn't matter. It has to be your money. The smallest amount, okay? I've had guys that are coming to me saying to me that they've earned £3, $3 from watching the streams, but they've said to me that they've executed nearly 70 trades and they have been successful on 70, no, not 70 trades. They've done 100 trades and they've been successful on 70 of them. That is brilliant. He's been earning 1 cent, 2 cents, 3 cents, 4, you know? He gets it. He's focusing on the execution, because then he has a sample size of trades. He can say, look, I've traded 500 times, right? Dude, I have been successful at 75% of these trades. I'm ready. And he's only been putting pennies. He knows that when he puts down, a bigger size, he's not going to be affected by it because his focus is going to be on the habit he's developed of applying the pattern. He's been looking at the pattern and he's been applying it. He's done it hundreds of times before, and he goes in and he makes his money. Yeah? That's what I need you guys to understand. Bitcoin right now has come back to the 50-day moving average. Okay? And it's pinned the 50-day. Granted, it could come back a little bit more. It could even come back and take out this zone right here. As it stands right now, it's still playing the formation. We are still in level 1 end, waiting for level 2 to start. All right? There are no trades until it breaks out of this area zone here. Likewise, Ethereum. Ethereum's a little bit volatile. She's come back down on the 200-day moving average on the hourly and the 800-day EMA on the 15-minute time frame. Look. There it is. Hate that. Here we go. Move that here. Jesus, man, that's so bad. Wow. Wow. Doesn't want to do anything. Here we go. There's that there. There's that there. And we are now waiting for this pattern to go up. Okay, that's what we're waiting for. The first rise out of the W formation always brings price back to the 50-day. Look at where it's at. Support at the 200-day. Aggressive candle to the downside, pins the low. Now we're looking to go up. We've got the New York reversal coming into play. All right. Now, guys, I hope this is helping you guys. I really do hope you get it, man. I really do, because I want you to, I want you to come back to me and say to me, I'm getting it, I'm getting it, I'm getting it, and then let me know about other videos that I can do. I know what videos I need to do, but I needed to do this video today just to air it out for you guys, so you guys, as the patrons, you understand what's going on. All right? Let's see how it plays out, guys.